to go?
Bruce, you can tell them we're ready to go.
Yeah.
Okay, I'm going to start then. Let's make sure that the slides are changing. They changed for you there?
Yes.
Yes.
Okay, perfect. All right, well, good morning, everybody. I'm really excited to be here today. My company is called Carrier Connect Data Solutions, and we are a co-location data center company. I think this is going to be the most exciting presentation you're going to see today. We are in the right space at the right time, experiencing absolutely massive growth in the data center industry. We went public in February. We're about an $11 million Canadian market cap. And when you see the opportunity and what we have already done in this business, you're going to see this is a very attractive investment opportunity. We trade on the venture in Canada under CCDS. On the OTCQB in the United States under CCDSF, which is the ticker that probably most of the audience today can buy. We're trading at about 86 cents Canadian or 62 cents. We'll get your bids filled on the QB. The market makers cross stock back and forth between the Canadian market. You can bid even if there's not asks, you'll get filled if you're in that 62, 63 cent range right now. But we're moving up steadily as the business progresses. What is a data center? So first and foremost, it's really important to understand the business we're in. We're selling, it's essentially a real estate play. You sell space, power, and cooling. Space being, this is a rack inside of a data center. Inside of this rack is servers. Might be traditional computing servers, might be new AI servers to enable all the new AI protocols and systems out there. But we sell space in a rack, so you can put your servers in the rack. We sell power, so everything obviously gets powered up. Cooling, which is huge to keep all the servers in the data center cool because they throw off a lot of heat. We connect your servers to the internet with fiber optic connectivity, and we run a whole bunch of power backup systems so the power never goes off. So even if the hydro to the building goes down, our battery systems kick in and keep your servers running. And then behind our battery systems, we have diesel generators. They can run for days and weeks. Even if there was, say a natural disaster and there was no power to the building, your servers would stay online and stay running. Now, what we don't sell, this is really important to understand, is we do not sell servers inside of the racks, and we do not sell services to update servers or run software on servers. This is an IT company or any sort of software company comes and puts their equipment inside of our racks, and we provide them with the infrastructure to run them. So we're a data center, it's called co-location. I don't care if an AI server becomes outdated in a week, a month, or 2 years. That's not our business. The company itself will come and pull their server out, put a new one in, and update them. We're providing the infrastructure that runs the internet and runs AI systems. So it's like a real estate play. Think of it as a building or a floor of a building in any major center where all the local companies come and put their hardware to run it on the internet. Gotta go the other way. All right, so what's going on in data center growth? It's exploding. The need for space in data centers worldwide, North America wide, Canada, US, is going through the roof because of AI primarily. If you ask ChatGPT to plan you a vacation to Ireland, it'll take 10 times as much processing power versus if you ask Google. 10 times as much processing power means literally 10 times as many servers on aggregate. 10 times as many servers means 10 times as much space in data centers. Every server that's running the internet and running software companies and running everything you do on your computer in the cloud lives in a data center, lives in somebody's data center hooked up to the internet, chewing away processing transactions. So you can imagine as compute power goes up, the need for space in data centers goes up very exponentially. This is specifically why I got into this industry, because of this growth and opportunity and the fact that it's going to be here for years and decades to come. You can Google data center growth yourself. You'll find 50 charts that look exactly like this. This is the same thing in written format. What is our company doing? We are doing essentially a roll-up play of buying small to medium-sized data centers that are currently private companies, or they may be owned by corporations, but they're not part of a data center company, primarily private industry companies. and we're buying them for private company multiples and adding them to a portfolio, a public company portfolio. The arbitrage opportunity is very, very significant. These private companies, might be doing $5 million a year in revenue, $10 million a year in revenue. They're great companies. They're profitable. Data centers, by the way, throw off typically 40% EBITDA, so 40% profit when they're 80% or more full. And by the way, data centers are almost always full, as we mentioned, because there's massive demand. People are buying space in data centers or renting space a year before they're even built. Let that sink in. Demand in the industry is so high that people are renting space a year before it's available to get in line to have a place to put their infrastructure to run their companies and run their AI companies. That's why they're profitable. They're throwing 40% profit. By the way, data center customers never leave. They're incredibly sticky. They don't want the risk of their servers going offline or downtime or issues for the customers. So they put them in the data centers and they keep them there for years. But there's these private corporations, great businesses, but they're owned by 5 entrepreneurs, and maybe it's 8 guys, and they have a great business. They have a paycheck, but they don't have any liquidity. They don't have any way to cash out and make a few $1 million and retire. That's where we come along. The big data center companies will never buy their small data centers. They're busy building $100 million facilities. They're $10 billion companies. We can come along and buy these data centers for 2 to 3 times revenue. And then immediately, as we add them to our public portfolio, a public data center company, and there's lots of them, they're usually much bigger, get a multiple of 10 times revenue. So if we buy a company for $1 million, if we buy a company for $3 million, let's say a $1 million revenue company, we buy for $3 million, which is 3x revenue. We put in our portfolio, it's worth $10 million. It's worth 10x revenue. So that's what we're looking for, primarily North America, but internationally. Private companies, good businesses, profitable, standalone. We buy them as they are. There's no need to change them or do anything to them. They have sales teams, management teams, etc. Put them in a portfolio and get a very significant re-rate on the valuation. One other kind is we can buy non-core assets from corporations. And what is a non-core asset? So think of a tech company, like a software company that owns a data center, but they're not a data center company, and they don't either need to or want to own the data center. We can buy from these corporations, again, for good prices and get it re-rated. So that's the thesis, and I'll tell you how it's going, which is extremely well. We bought our first data center in Vancouver in February. It's at 200 Burrard Street. It was called Carrier Connect Systems, and that's how our public company came to exist, Carrier Connect Data Solutions. That was our first asset. It's right in downtown Vancouver. It's a small urban center, but it was perfect for the first transaction because I didn't even need to raise any money to buy it. I owned personally the capital pool company that I created to look for business opportunities. With my capital pool company, we bought this data center, took it public, and ended up with Carrier Connect Data Solutions. It has about 50 racks, and it's about 1/4 megawatt. Great facility, profitable. Last year it did, it's a small data center, like I said, 360,000 in revenue. This year the target was 500. It's going to do way over that, probably 750 and growing. And it's the reason we're growing so quickly is we're actually putting AI companies that didn't used to exist into the racks, and they'll pay 2 and 3 times for space what traditional compute companies will. So we got the first data center and we were off and running. Then we bought a second data center in Australia. This is a phenomenal facility. It's 2 megawatts of power, 220 racks of space. Everything's built out. It looks like a brand new data inside. It's got 3 diesel generators for backup systems, 3 industrial chillers, full battery backup. It's doing today about 65,000 a month in revenue, but it's only 20% full. It can do 330,000 a month without a single extra dollar of investment, which is about $4 million a year. $4 million a year could be worth up to $40 million in market cap. It's got $6 million worth of hardware in it. So the racking systems, the generators and everything else. If I just shut it down today and sold it, I could get $6 million for these assets and for this hardware. And it would cost $20 million to build. Data centers cost about $10 million a megawatt to build. This is a 2 megawatt facility. So if we went and built it today, it would cost at least $20 million. But it was owned by a software company that ended up with this data center through an M&A transaction. They bought another software company. That other company had a data center. and suddenly they owned a data center. And again, this is like our model. They're not a data center company. In fact, they had no interest in being in the data center business. So they wanted to offload it. We heard about it first. We heard about it through the network. Our CTO is the guy who owned the Vancouver data center. He had a relationship. We flew to Australia. We signed the LOI. And we said, hey, we had just gone public. We had just bought our data center in Vancouver. And we said, we'll take this off your hands, because they frankly really did want to get rid of it. They didn't know how to run it. They didn't know what to do with it. And we said, you need to give us a good deal or some good financing in particular. And we bought it for 2.5 million Australian, only 300,000 upfront. This is the crazy thing, 300 grand upfront, and the rest was on a 25-year vendor take back. So they financed the rest. And again, it would cost 20 million to build, and there's $6 million worth of hardware in it. It's profitable today, and it can grow 5x from where it is in revenue as we fill up the rest of the space. And I have all sorts of customers already coming to us saying, oh, you actually have space. We'll move our servers there. This is going to be an absolute cherry facility for us. And again, we've already acquired this and added it to the portfolio. We then signed an LOI to buy a data center company in Ottawa called Pure Colo. They have two 2-megawatt facilities, so 4 megawatts in total. This would cost $40 million to build what they have. It's 4 full data halls, which are rooms that host racks and servers, 60 international customers. The government of Canada is a customer. They've built this from scratch, bootstrapped it. It's 8 years old. They've only ever lost 2 customers in 8 years, one of which they fired because they weren't paying their bills. Another one left to go somewhere else for another reason. The stickiness of the revenue is phenomenal. Today, they're doing 2.6 million a year revenue. They have the space because they just added 2 of the new data halls to the company, meaning they had 2 more parts of the data center with racking. They can do up to $6 million a year. This could be a $60 million market cap business all on its own. It would cost $40 million to build because it's 4 megawatts. We're buying it for $8.5 million, and we're going to close it in Q4 of this year. So that'll be the 3rd data center. And here's the timeline that we're going on. We went public in February, listed as CCDS on the TSX Venture. Again, in the US, it's CCDSF. Through the end of this year, we're acquiring data centers 2 and 3. 2 was Perth, Australia. The 3rd one will be Ottawa. And then through next year, continue to expand the portfolio. We have very active conversations going on with data center companies in Edmonton, St. John, New Brunswick, Calgary, Mississauga, Buffalo. Our model is, so far the investment thesis is working extremely well. We're finding great assets, self-contained businesses, profitable, that we can buy, again, for very attractive prices, as you've seen, add them to a portfolio and get them re-rated essentially as part of a public company portfolio. We thought about starting to build our own. We're at, as I said, like about $11 million market cap, which is incredible what we have for the market cap we have so far. But once we're $100 million market cap, we were like, okay, maybe we'll raise $25 million and start building data centers. But I'm actually becoming a much stronger believer of there's no reason to stop buying, adding to the portfolio, operating businesses, and building the pubco and the holding company that way until we run out of companies to buy. And if that's the case, then sure, we can build. But every time we add a portfolio company, our valuation becomes very significantly higher, and the company continues to be successful. At this stage, when you're fairly early on, although we've grown really quickly and very successfully so far, you're counting on a team. My background has been a public company CEO most of my career. I'm a tech guy right from the start. I have a computer science degree, then a business MBA, and then started getting involved in public tech companies. My last company started with 2 people, started with a 3-cent stock, started with a $3 million market cap, and I built it to a $1 billion market cap company over the course of 6 years. While doing that, raised more than $50 million as a public CEO just with that company. I've been the CEO of 3 different public companies. The first one, we hit a $1 billion market cap. The second one was actually a capital pool company I created and bought a cybersecurity company that's now $125 million market cap within 2 years. And my third one is this company. Started out as my CPC, bought the data center business, and we're going to grow this very significantly. I retired for about 2 years and realized I need something to sink my teeth into for the next 3 to 5 years. And this is it. This is a long-term play. It's my money. It's my family's money. It was our CPC that we created. That's why I could buy the data center company with no raise. And you're going to see the capital pool company, sorry, you're going to see our cap table, which is very tight and very impressive because we didn't need to go raise external money right out of the gate from, what I like to call the IR scammer type people that are always around trying to invest in your company when it's cheap. Our CTO is John Arnett. He owned the data center at 200 Burrard in Vancouver that we bought. Serial tech entrepreneur, once an Entrepreneur of the Year award. He's forgotten more about data centers than I'll probably ever know. He was a perfect guy when I said to him, okay, let's merge these companies, but we want to go buy a whole bunch and build, a company in the many hundreds of millions to $1 billion market cap. Do you want to do it with me? And he said, absolutely. So John, we're partners in this business. He's my CTO, incredible guy at the helm. So we have the tech side covered. We have the business side covered. And then we have two guys on our board that have a ton of public company experience. Mitch Demeter, he runs a company currently that's public called SPETS, SPTZ. He worked for me at Big Digital Assets. He was eventually on our board and sits on multiple public company boards. And then there's Peter Smirniadis, who runs Victory Square Technologies, an incubator in Vancouver for early stage tech companies. These guys have great networks and are a very valuable asset to us. And then I have probably the best capital markets advisor in the market, a guy named Dan Barnholden. He worked for multiple different investment banks. He's literally raised over $1 billion for his clients over the course of his career as a banker, banking everything from mining companies to tech companies. About a year ago, he finally decided he was going to go become a CEO himself of a public company. It's called Luca Mining. He's taken it from 25 cents to $1.50, $1.60 Canadian in less than a year. And he's there step in step with us helping build this business. So we got a tremendous advisor on the board. And as I said, this is the best cap table you're going to see today. It might be the best cap table you see this month. We only have 13.3 million shares outstanding. 32% are owned by insiders. Myself and John own over 2 million shares each. We're in this for the long term to build a very significant business. 4.3 million shares are escrowed, both from the CPC and from 200 Burrard, the first data center. Most of them are owned by John and I anyway, so we wouldn't sell them even if we could. Plus, they're locked up by the exchange. So there's less than 7 million shares free trading. Tightly held vehicle. It's growing very steadily. You look back at the chart, and in fact, I have a new chart. Here it is, new slide just for today's presentation. We went public again at about 15 cents. Very purposely, I said, let's go out with a conservative market cap. We're not going to overvalue everything. We're going to build a really nice top line, cash flowing, profitable business by acquiring data centers at good prices and frankly, having them re-rated at public company prices, gone from 15 cents to about 85, 86 cents Canadian, which is again about 62 cents US. But the beauty of it all is with 13.3 million shares, it's still only $11 million market cap Canadian. Absolutely phenomenal time to invest. This is our very first conference, first presentation in the US. We got our QB listing just a few weeks ago. So you are here at a perfect time to invest in this business right as we start marketing our data center company, data center roll up into the US market. I have great connections in the US from my other companies throughout my career. We're going to do a lot of conferences. We're going to do a lot of broker meetings, non-deal road shows, family offices, you name it, get the message out. And that's going to provide a significant catalyst to the movement of the stock up to a valuation that's going to be much more reasonable versus where we just got going. Obviously, we're going to be adding data centers number 3 and 4 now that we have 2 under our belt with Perth. Top line revenue in the next 6 to 12 months will 10x with the acquisitions of the data centers in our pipeline. We're going to continue to fill up our data centers, the new one in Perth that has lots of space, and adding AI type companies in 200 Burrard, which really increases the revenue per square foot and per footprint that we have. And then investor outreach, as I talked about, getting out and telling the carrier stories. I just mentioned we're going to do a lot in the US. We're just getting Canadian marketing going as well. And that's the business. I'm obviously excited and fired up about where we're going. The capital structure is good. The business is requiring good. We have the right people and the right management team, the right board, the right advisors. We're in a hot space. Whether I'm in it or not, data center growth is going to continue very significantly over the next 10 years. And there is a phenomenal opportunity to help these entrepreneurs or companies that own data centers that want liquidity for us to take them, put in a portfolio, run it for cash flow and keep growing it, or we sell it to Cologix or eStructures or Equinix, one of these large public companies. They will buy a portfolio of data centers happily from us because that's one transaction. What they don't want to do is go around and buy up a whole bunch of smaller and medium data centers and do all that work. We're doing the work. That's why we'll get paid for it, because we can sell them a whole portfolio for, again, a very, very significant premium over our acquisition cost. And that's it for the presentation. Market Carrier Connect DS is in datasolutions.com. Honestly, email me. I'll send you the presentation. I'll answer questions. We're welcoming new stakeholders, new shareholders, new investors right now as we go. And again, the ticker in the US, CCDSF. Thank you very much. I imagine we have some questions.
I have a question.
They can't see us, I don't think.
Oh.
No, I can't see you, but I can hear you a little bit. Go ahead.
Oh, okay. Who do you consider your main competitors?
Yeah, that's a great question. So in the roll-up play, we don't have one that I'm aware of. I mean, the other data center companies, most of them are, many billion-dollar companies that have a portfolio of data centers, like a Cologix or an eStructures, and they're building very large facilities. So they're not trying to buy the companies that I'm trying to buy, so they're not competing at that level. We're the only public roll-up play or private roll-up play that I'm aware of. I think there'll be more as we prove this model and show how valuable it is. So we're early movers, just like, when I got into crypto in 2017, we were very, very, very early movers. And, as I say, if you're going to be on the bleeding edge, you have challenges, but you usually get, rewarded for it financially. In terms of the data centers themselves, it's really companies like Cologix, eStructures, Equinix. So if I buy one data center in Ottawa, the other company in town, for example, that's selling data center services is probably a Cologix. Now, it's not concerning to me from a competitive point of view because I'm buying an already existing operating business that's cash flow positive and has its own customer base. And remember, the stickiness of customers in data centers is very significant. No one pulls all their gear out of one data center to move across the street to another one, even if the price was a bit better, which it's not. The bigger companies charge more because they don't want the risk of downtime and being offline. So there is obviously competitors in the space, but there is none yet in the roll-up play that we're running.
Thank you.
I have a question.
Yeah.
You mentioned that a lot of the companies that are taking space in your data centers are AI companies. A lot of the titans right now, like Facebook, are lowering their investments in AI and whatnot. And some people are saying there might be a bubble. And you didn't really mention what other types of companies there are. Is the population diverse enough to survive if that were to be a bubble and it bursted?
Yeah, great question. Absolutely. So in our data centers, AI type of companies are probably only currently 2 or 3% of revenue. Most are traditional compute companies. We're in British Columbia. We have, mid-sized construction companies, small software companies. We have lots of managed service companies in our data centers, which are, 5-person companies that are small IT teams that manage IT for a wide range of tech customers and small businesses. And they'll come in and, buy 5 racks worth of space. And as their customer base and as their business grows, they actually have to then put more servers in our data centers to service their customers. So some of our customers are, essentially middlemen that also act as sales agents because when their business grows, so does ours. But AI is quite new, as you know. It is driving growth. We are taking in some AI customers, but today, primarily the mix is, traditional compute, traditional Dell Blade servers and things, and not new AI servers. So we're in a great spot. We're not investing or building $100 million facility to serve Facebook or Facebook, serve their customers in the AI space and then find out the bubble bursts. That won't affect us at all.
Thank you.
No problem.
I consider myself sort of a socially conscious investor. I notice your team is all white men. Would you say that your company that we're just not seeing has more diversity in terms of gender and race?
Yeah, actually, our CFO is a female, and she is a foreign person as well. So we do have a diversity. Now, we are only really a 4-person company at this point, but our head of finance and CFO is Zula, and she is female. So I'm a believer in diversity as well. So we're really the 3 main people that run the company. We're 1/3 female, and 2 of us are Canadian, and 1 of us is not.
Thank you.
No problem.
Do you see any impact of cloud storage?
Can you say that again a little louder? Sorry.
Is there any impact you see with cloud storage versus data center?
Yeah, so it's an awesome question, actually. The cloud is a collection of servers that live in the data center. So Amazon sells you cloud services and cloud storage, or maybe Apple sells you cloud storage for your iPhone backup. I mean, a lot of people do stuff like that. Software companies all over the world use Amazon to run in the cloud. And what that means is they're renting space on Amazon servers instead of buying their own servers and putting their own servers in a data center. You know where Amazon servers sit? They all sit in a data center. So when the cloud grows, so does the data center industry. We don't have Amazon in our current data centers, but there's a data center right across the street from us in Vancouver that's full of Amazon servers. And as we buy bigger and bigger data centers as we grow, Amazon will be in our data centers. They're in data centers all over the world. That's where their hardware sits. They have to rent it from other people and rent the space, and then they sell the cloud server space to customers out all around the world on the internet. So anytime someone is using the cloud, they're using a server that somewhere sits in the data center, whether it's Amazon's cloud or Microsoft's cloud or Apple's cloud or Facebook's cloud. So that, in another part that's really driving some revenue as well is the idea of sovereign cloud, they call it, meaning you want to know where your data is. So Americans like to know that their data is in the US, Canadians like to know their data is in Canada, Australians like to know that their data is in Australia. And that is causing people to take business away from Amazon and out of the cloud and buying their own servers and putting it in data centers, because then they know exactly physically where their data is, which is also helping drive particularly our data center growth, because again, we aren't servicing Amazon with our current businesses. So it's impacting the industry in a positive way for us.
Thank you.
Great question, though.
Quick question, just talking on data centers, what's your, do you guys have a company approach from like the environment perspective when it comes to data centers? Like if you guys are approaching it in a unique way, like for green energy, different things?
Yeah, I mean, we just bought this data center in Australia, in Perth, and we're actually investigating how to set up a solar farm, because Perth, I mean, it's essentially beside a desert, and there's tons and tons of solar heat and energy. And we would love to power our data centers using solar power and getting off the grid, off the traditional hydro grid as much as possible. So that's something as we grow, we want to do. And as we raise capital, we want to invest in, which gives us, it's good for business and it's good for business. And what I mean by that is it's lets us be green, right? And that is positive from an investment point of view, but it also lets us lower our cost of electricity, which does a couple different things. One, it either lets us increase profit, which is, we're a public company, a for-profit business. So if we don't change the price we charge our customers for space and power, we have more profit if we can produce electricity cheaper, or we can pass it on to our customers, or some portion of it onto our customers for savings which makes our data centers more attractive. The vast majority of data centers are on the public grid, government provided or government utility grids. So you can't really compete on power prices for the most part. But if we do build, particularly solar farms, we will be able to get off that grid. And it works best if you're in data centers at the edges of a city where there's a lot of space. And that's what we have in Perth, and that's what we'd like to do with more data centers in the future. So something we'd really like to get into.
Awesome, thank you.
I got one more.
Sure.
You said, quote, this is something you'd like to sink your teeth into for the next 3 to 5 years. What happens after that?
Well, that is one of two things happens after that. I mean, by then, this company, by no stretch, should easily be in the multiple hundreds of millions of dollars of market cap, right? If we execute on a plan with 10x multiple over revenue, that's going to happen quickly. So when we hit that point, either we'll be able to sell the business, the whole portfolio, the whole company to Cologix and eStructures and Equinix. I mean, these are big companies. Cologix is a $7 billion private equity owned company out of Denver. The head of sales for Canada lives like 3 blocks from me in Canada. So we have a good relationship. I've even toured their data centers. They would buy us because they're growing, they're expanding as fast as possible, but they won't go buy one-offs. They will buy a portfolio. So we could sell to those guys, one of the larger players in the space. Or we can say, hey, listen, we have a great public company, great growth, great stock price. Let's keep under this model or start building our own data centers. But at some point, it'll be a time for me to say, hey, I accomplished what I wanted to accomplish, and it's time to move on. Excuse me. So we'll see, right? I'll decide it's time for me to pass this on to a CEO who is good at the next stage of growth, which might be, $1 to $10 billion worth of revenue. I'm really good at the 0 to $100 million plus market cap, but there is people that might be the right guys to take us, or women to take us from, again, $1 billion to $10 billion of market cap at a whole different global level. That could be the time for that. And I know when it's time to put the different leadership in place. So we'll see when we get there. But, I think that'll take, give or take 3 to 5 years. And that's the plan for me.
Thank you.
Time for one more question. Uh-oh, I may have to come up with it. This may have been asked. I just kind of rejoined here, Mark. But in terms of your closest comps, like when we try to put a valuation on your company, who are we putting into your comp group?
Yeah, so it's an empty comp group because there's nobody else doing roll up right now that I'm aware of in North America of this kind of play. I think it's unique. I think it's an amazing business thesis and investment model. The main competitors in the space that are public are dramatically bigger. I mean, the large NASDAQ data center company is Equinix, and they are somewhere around 8 billion in revenue and 80 billion market cap. So what you see is every time you look up a data center company that's public, it's 10x of their revenue is their market cap. And with just what we showed you today, that's in our very imminent pipeline, there's more than $5 million a year worth of revenue, which is a $50 million market cap valuation, which is 5x where we sit right now in terms of market cap. So as we get bigger, we'll be able to find more comps. But that'll take a little bit of time. And I'm actually really like the greenfield space we're in right now. And there's nobody else. I'm not competing to buy these assets, which lets me get them for good prices. And yeah, it allows us to be in that, hyper growth mode from a market cap and revenue point of view.
That's terrific. Any final comments, Mark?
I want to thank Singular Research for having me here today. I did lots of Singular Research conferences with my old company. We usually saw tremendous buying and investment on the backside of these conferences, is why I'm back with Carrier. This is the first US conference we've done. So I expect to see a really positive outcome, and I hope the people in the room and the people watching online pick up some Carrier Connect, CCDSF, put in their portfolio, and be part of the exciting ride we're on.
We'll have to have you talk to one of our analysts very soon as well.
Yes, and I've done research with Singular as well, and I look forward to that.
Terrific. Well, thank you, Mark. Hand for Mark Binns. Thank you very much.
Thanks, guys. Appreciate it. Have a great day.
Thank you. We're going to take